Hi everyone, this is Gary Wilson and welcome to this week's weekly live webinar for the Investor Agent Training Program. Also, some of you are on board from Flipping for Profits, Rental Profits, and the program we just rolled out last week, Turning Rental Problems into Real Estate Profits, basically the Property Manager Program. So welcome aboard to all of you, and particularly welcome to all the new folks. And most importantly, we have some wonderful guests tonight. We've got Elizabeth Fergale and Corey Englund from RH Funding, RH Lending, and they agreed to come on board and talk to us and give us an example, a success story of one of the clients they've helped. And the way we're going to go about this is go through an example of a client from start to finish and bring up some examples that allow you guys, all the students, to ask questions. And again, if Corey or Elizabeth want to hear you vocally, we can unmute you, or we'll just do it, have you type in your question and then respond vocally. So Elizabeth and Corey, welcome aboard, you guys. Thank you so much for doing this. I mean, this was a wonderful treat and such a valuable, part of our business. I mean, quite frankly, if the funding is the lifeblood of any business. If you don't have the funding, you don't have a business. So what you guys do is an invaluable piece of the puzzle particularly for investors, because as you know, real estate is expected to be leveraged. It's not like buying stocks and bonds. So first off, thank you very, very much for being here, guys, and welcome aboard. And I want to let you do a introduction. Just tell us briefly, like who you are, where you are, how you got into the business, and then also for those who are online here, literally are from California to Maine and Montreal to Miami. Let us know where your company serves, and I think you serve pretty much everywhere, and that'll make a lot of people feel really good. So thanks, guys, and welcome aboard.
Thank you so much for having us tonight, Gary. Hello, everyone. Good evening. My name is Elizabeth Fergale. I'm a mortgage loan originator with Residential Home Funding. I've been in the business for 11 years now.
Hello, everyone. My name is Corey Englund. I'm also a sales manager at Residential Home Funding Commercial Capital. So we have a residential division and we have a commercial division, and we're going to speak to you guys about both tonight. Very briefly, I want to let you guys know I very, very much so enjoy what I do. I've been in the industry for a little under 16 years, and again, my clients are really what makes me, and I really, really thrive off the opportunity to assist all of my clients in the best way possible.
Awesome. Okay. Now, understand you've obviously got a lot of years of experience. Is it you had an example of a client perhaps we can walk through? Because what I just want to let you know, a lot of these folks have some work with investors, some are just starting, and I want them to understand that not only is this a valuable and necessary part of our business, but if they understand a little bit about what goes on behind the scenes, what your expectations are of them, and by showing by example, is just so invaluable. Do you have a case, like a case study you can use to go over with us, to just from literally from start to finish, application to funding, that you can go over with us?
Sure, I absolutely do. And you know what, Gary, I just wanted to take a second again to thank you guys very much for allowing us to just share some information with you. I know if you're on the East Coast, it's 7 p.m. on a Tuesday evening. If you're on the West Coast, it's 4 p.m. So I wanted to thank you and thank our attendees for just taking some time and just, allowing us to speak to you guys, okay? Before I actually get into the scenario, I just wanted to speak very briefly about not just what, the expectations are, what you can expect from us, but just in general. So as I mentioned to you guys, I have over 16 years of residential and commercial lending experience, and one of the things about Residential Home Funding, we are licensed mortgage bankers. We lend nationally. We have an excellent rating with the Better Business Bureau. We're always ranked within the top 100 banks nationwide every year. So, customer service and satisfaction really is what we take pride in, and we want to ensure that it's an excellent reflection of you, because if you take the time to refer someone, we want you to be able to feel great about the referral, and also we want our clients to be able to feel great about the fact that they've completed a transaction with you and with us, okay? So we take a tremendous amount of pride in ensuring that your clients are not just an application number, for us, they're honorary family members, and we're very sincere about that. And that's one of the reasons that we're able to maintain our excellent rating, and we're always, again, ranked within the top 100 banks. So, for us, what we do is we look at each individual scenario individually, whether it's a owner-occupied property, whether it's an investment property, whether it's someone that's looking to diversify their asset class. What we do is we want to get to know the borrower first and foremost, okay? So on the commercial side, this represents a great time to actually be investing or just to be a part of the commercial real estate finance industry. If anyone that's on the phone today happens to live in any of the metropolitan areas, commercial real estate is flourishing. And I think one of the reasons is that, again, it's a great asset class in today's environment. The programs that are out here today really facilitate buyer or homeowner investing, and we have a lot of great programs that can facilitate the same. So some of the programs that we offer lending programs for property types such as your 1 through 4 residential properties, small apartment buildings, large apartment buildings, mixed-use properties, whether they're owner-occupied or all investment. We do industrial financing. We do warehouse financing. We could lend on some industrial types such as auto body shops. We do church lending. So I think we really cater to all of your property types available, and we offer a variety of different loan programs such as bridge loans, hard money loans. We offer your Bank A quality loans to buyers who are looking for really aggressive rates and long-term financing. So we definitely have a variety of loan products and programs that can really cater to any scenario. So just to give you guys a brief example, I had 2 transactions that I closed within the last 2 weeks. The first transaction, I have a gentleman who owns a 4-family investment property in downtown Brooklyn in a Park Slope area. And anyone that's familiar with downtown Brooklyn, excellent community, very viable, very upscale. The appraisal came in with a value of $8 million. My client had outstanding liens on the property. He had 2 mortgages, one for $500,000, one for $150,000. So what we were able to do and what he was looking to do, he was looking to actually cash out $2.5 million. So he wanted to pay off his current liens. He wanted to cash out to do some capital reinvesting, and he also wanted to invest in some additional real estate. So in this scenario, he was actually looking for something that was a little more longer term. So we got him a 10-year fix, which is an excellent term. That's exactly what he was looking for. He wanted something that was between 7 to 10 years because, at the expiration of the term, he was looking at that point to probably sell or most likely to do a family restructuring with another family member. So we were able to get him a 10-year fix at 4%. We were able to get the transaction closed in 2.5 weeks. So we were very aggressive with getting his property appraisal ordered. We utilized the rental income from the property to qualify. So what we did is we did a debt service coverage ratio on that, and the rent roll was perfect, especially for the downtown Brooklyn area. And we were able to get him closed. He was able to get his capital. And in a scenario like that, we will look at an individual's credit score. We will look at, obviously, the property's ability to sustain itself. But we're not so much looking at tax returns in terms of doing a debt-to-income analysis. We really base our primary focus on a property's ability to sustain itself. And again, the client was very happy. We got him a very aggressive rate. We got him the term that he wanted, and we got him the capital that he needed to do his capital reinvestment, okay? The second scenario, I had a gentleman that was looking to purchase a single-family home in the Westchester area. This was purely investment. He was actually looking to get some so we got him a 90% loan-to-value, and we were able to get him 100% of the capital that he needed to complete the renovation. So his exit strategy is to purchase, renovate, and flip it within 6 months. So we were able to got him an excellent rate, and he was very happy.
Awesome. Okay. So what, if you don't mind me asking, by the way, a couple questions already coming in. One of them is asking what is a good website address for us. So if you want to go ahead and provide your contact information, website address, emails, phone numbers, well, I'll have you do that at the end also, but everyone can write that down now. if you want to go ahead and provide that.
Yeah.
And when you're done that, if you could, let's say you've got an agent out there who's fairly new to the business. They use the marketing we teach. They've got their first couple of clients, and they approach you. What are some of the steps that you can instruct them on how to prepare best to help you help them? Like break it down real granular. And if you have samples, that would be great too. If not, that's okay. But so go ahead and provide your contact information, website, all that, and then let's talk about. Hey, we're just starting off here. We got a brand new guy. How can we best as agents prepare to help you help us?
Well, Gary, once I conclude this part of the conversation, I have a slide that I'm going to display on the screen, and it will have my contact information, and I'll also put up our RHF Commercial Capital website, okay? And any additional information, I'll also provide my email address, and I'd be happy always to answer any questions or send anyone any direct forms as they may be needed. So for the new agent, what I would recommend, and this is as I mentioned earlier, we really want to treat each client and their asset class individually, because you may have a seasoned investor that's going to be very different from your first-time fix and flipper. So one of the first things that we'll probably want to see a personal financial statement, and that'll just give us an idea of obviously the person's current work experience. I want to know, are they working full-time? Are they fixing and flipping full-time? I'll also have them complete a management resume. I'd like to get an idea if they have any prior real estate experience. Do they currently own their primary residence? Do you have any investment properties that you're renting? Or maybe you've had some experience flipping, fixing and flipping. So the more experience, obviously, the more comfortable we're going to be with extending credit to the borrower. So in that scenario, what I would do is I would definitely have some preliminary forms for you that you can have beforehand. So you already know in advance. If you have a potential client, then you can say to them, one of the first things we'll need to do is have you complete our personal financial statement and our management resume, okay? And also, I'll also send a list of maybe about 5 to 10 questions that you can ask to probe to kind of get an idea of what they're looking to do. Because once we have an idea of what they're looking to do, i.e. property type, term, and what type of assets they have, we can definitely cater the programs for what they're looking to do. Was that helpful, Gary?
Yeah, that definitely helps. Do you have on your computer, do you have anything on your hard drive like the application, for example, or maybe a sample of a management resume? Because I know what you're talking about. When you're working with investors, once they have a couple properties under their belt, it's really just like a regular resume you'd use for applying for a new job. You want to see, in their own words, what is their experience in this? Because as they grow as investors, of course, they might start off with a duplex or a fourplex or flipping a property, for example. But as they grow, I know because I used to be in a bank for 18 years. Of the 4 C's in lending, we got cash, collateral, credit, and character. What happens over time is character becomes far more valuable to a lender. They want to see, for example, not just how you did in good times, but how did you do in a recession? How did you do in bad times? Did the ship make it to shore? That's what we call character. And lenders are very interested in that, particularly in a shifting economy. And also, as an investor grows, the larger the property, the more they look at the property and the less they look at the person. I'm not saying you don't look at the individual, but applications on hand. Let's just show them. So it looks like you're doing one now. Examples, and then maybe an example of a resume or a blank. That's perfect. Yeah. So everybody should be looking at this and taking notes. And so Corey, I'll let you kind of go through this, if you don't mind. Just kind of go through it, and then we'll get to some questions here in a second.
Sure, definitely. Thank you, Gary. So this here is our typical commercial loan application. Generally speaking, after I receive and review the personal financial statement and the borrower management resume, I like to have them fill this out. Sometimes I may even send this in advance of the personal financial statement. It really, really depends on the property type, and it depends on the investor sophistication, and it also depends, again, on what their experience is. But just to kind of go through the commercial application, so at the top, typically I like to see, obviously, who my applicant is, name, email address. One of the primary questions for commercial lending is whether or not the property will close in the name of an LLC, a corporation, a general partnership, limited partnership, because with commercial financing for some of the newer agents, one of the ways in commercial real estate to circumvent RESPA, because with residential real estate, we have these governing bodies that we have to adhere to, but with commercial real estate, we're able to circumvent that under the premise that these are loans that are made to businesses. And if you're a business owner, there's an assumption that obviously there's a level of sophistication that does not require the level of governing that residential loans do. So with commercial finance, 99% of the time, we're going to require that the buyer close in the name of either an LLC, again, a corporation, or a partnership, okay? So again, I list here the different type of entity just so that we know in advance what type of entity we'll be financing. Now, if the borrower currently has a business that we're refinancing, I'll typically look to have the business address, the borrower's telephone number, and all principals that are going to be involved in a transaction. So if there are multiple principals, ideally we'd like to know who we're doing business with. Ideally, we want to know if there's ever been any criminal history, and I think that's a formality in the industry, especially as we have some of the higher loan amounts. We definitely want to ensure that we're dealing with people who have some type of financial understanding and at least a clean financial history, okay? As you move to the middle of the application, we also want to get an idea of the type of property that they have an interest in. So if they've already identified a property, we just want to get an idea, and that will give us an opportunity to identify that asset class to see exactly what we can offer. So if it's an office, an industrial, warehouse, shopping center, apartment, if it's residential in nature, meaning 1 through 4 units, again, they can identify that here. As we scroll down, we'll get the property address, and if it's an office complex, I mean, generally speaking, we'll want to know, are there parking spaces? What's the total square footage of the building? And then, ideally, if they know what the annual property taxes are, they'll list them here. Some of the information that's here we will ascertain ourselves, but again, as much information as the borrower or the realtor is able to provide to us, it becomes more helpful in our ability to assess the transaction, okay? As we move to the bottom, we'll want to get an idea of exactly, obviously, what their assets are, what type of down payment they're looking to do. We want to know if it's a purchase transaction or a refinance transaction. And between this information here, this will definitely give us an opportunity to at least assess what they're looking to do and our ability to be able to assist them.
That's perfect. And by the way, you mentioned something earlier too. I wanted to elaborate on it for a moment. See, folks, when you're working with investors, most investors do not want to do FHA underwritten loans because they're a pain in the neck, they take too long, and quite frankly, a lot of them don't work out. So a lot of investors are using conventional loans, in this case, commercial. What I've done, I mean, I've set up at one point, I think I had more than a dozen LLCs. I never wanted to have more than $1 million in any one LLC. But what it does is it does allow the lender to have more latitude and less restrictions, less government restrictions. When you're doing FHA underwriting, lots of restrictions. When you get outside that corral, if you will, it makes it a lot easier for investors to work with lenders and get financing. So, Corey, I appreciate you bringing that up. And let me look, I just want to see, we got a couple questions here if you don't mind. One of them is from Elizabeth. Hi, Elizabeth. Is there a minimal amount for a loan? And I know that's probably one of those it depends kind of answers, but maybe give a few examples of what your investors might be looking for on the back end of the loan, Corey and Elizabeth, as far as minimum amounts go.
Well, Elizabeth, that's a great question. I think generally speaking, our minimum loan amount is $250,000. I mean, I have finance loans as low as $200,000, but I think that the general demand in the marketplace is for loans with a minimum loan amount of $250,000. I mean, it just makes it easier, whether it's a commercial mortgage-backed security or whether we're going to, we're acquiring funds from a private investor. It just makes it easy for them to pull the funds together, or at least it makes it more of an attractive deal. So I think that's a very, very good question, Elizabeth. And I think for some areas, I know you do have, commercial real estate that tends to be south of 200,000, and I think there's still may be viable opportunities. I just think if you do have something and you think it's really, it really rent rolls well and it's not hairy in terms of anything that stand out, then I think it's something that you can contact us and we'd be happy to discuss with you on a case-by-case basis.
Excellent. Yeah, a lot of this I know from my own experience. The fundamentals are pretty much, they stay the same no matter what over time, but it's the application that really is one-on-one. So every situation, every investor is different, every property is different. So a lot of times I know you guys get a lot of questions from people, and I know it's difficult because you really have to interview somebody almost. You have to ask questions, let them give you the answers, and you can kind of custom fit or tailor a solution to what their needs are. Another good question we got is, this is from Roger. Hey, Roger, how you doing, buddy? Roger is asking, can we receive copies of each of these documents, the commercial application, personal financial statement, management resume, etc.? So, Roger, that's an excellent question. And so, Corey, one of the things we can do is if you want to, you or Elizabeth email me, I can have Beverly send these out, or on the community site we have developed, we're in the process of adding you to our community site, which is across U.S. and Canada. We can, on there, you can provide a link if you want, or maybe a download that they can use to get these forms, because what it'll do is not only will they have it and they can become more informed themselves, but they can provide them to their clients, to their investors, and it's kind of helps get the thing jump-started. So can you best see us getting these forms in the hands of these guys watching tonight?
Well, you know what we can do, Gary? We can one of two ways. I think your suggestion was excellent. We can also I can provide my email address and obviously the company site, but my email address really I think is the best, because if you can email me, I'll have the ability to reply, and I can PDF attach all of the forms that you may need so that you can have them in advance. And I think that'll give us an opportunity to kind of build a relationship also.
I agree. And hey, now, would you happen to have a sample of a management resume or a template or a blank one that you use to give people as a model, or maybe one? I know we'd love you to have you show us one that's filled out, but then that could pose a problem as far as blanking out private information,
Yeah, and Gary, to be honest, I have a couple of forms that are actually completed, and just for confidentiality, I don't want to put that up on the screen at this time, but I'd be happy to email anyone a blank form. Again, I'm going to put up my email address, and I'd be happy to reply to show you guys, I'm sorry, Elizabeth is making a comment.
If you want to share with us the names, the email addresses of all your attendees, we can send them out to each one individually. Gary.
Okay. Yeah. What we'll do is Beverly controls all that. I'm gonna at the end I have to download this and upload it, and then Beverly's gonna send it out. I'll just make sure and we're gonna copy you obviously on there because I want you guys to have copies of this as well. You can use it. If it helps you guys also in your own efforts. But one of the things that came up here too is while you're bringing up there's a management resume. When it comes to
blank that I can pull up for you guys.
Okay. And while you're doing that, I know a lot of the funding has to do with buy and hold strategies. In other words, people are building portfolios, they're buying rentals and building a portfolio of rentals. What are the opportunities right now for people who are flipping? And there's a couple scenarios. You might have a flipper who is paying cash for the property and they just need a loan for remodeling and then refinancing at the end, or maybe they're financing the whole darn thing. What kind of things are you seeing out there in the world of flipping? Before we go there, I see you've got this resume up. Let's go over the resume first, and then we can talk about flipping and how do we help these folks help their clients who are flippers,
No problem. So Gary, I actually pulled up a blank management resume, and again, this just gives us a basic idea of what, who we're dealing with. We just want to get an idea of who our client is. So at the top, again, we're going to ask for your name, your date of birth, your telephone number, email address. as you scroll down, your current address, your previous address, it'll be helpful to know if you're a government employee. If you sometimes with our government employees, we're able to extend our offering. Sometimes we have special incentives, so we ask because it's helpful to know. And then we also follow up with, we want to know if you have any military background. We want to know if we can maybe extend anything additional for some of our military personnel. We do ask for educational background, and again, it's more just to kind of increase the comfort level. We want to know exactly, again, it's just more for informational purposes in terms of education. And then lastly, we want to know what your business experience is. Again, if you're a real estate investor full-time, you can list that as your business experience. Or if you're a real estate agent, you can actually list that. So again, it just gives us a better idea of exactly who our client is and what products and services we may be able to offer you. When we combine our management resume, our commercial loan application, and our personal financial statement, it really gives us a very, very good view of who our client is. And I think that's very important, not just for this transaction, but moving forward, because with that, we can definitely roll out and cater any additional products to you.
Okay, excellent. I appreciate that too, by the way. This really gives people a good idea of the kind of information you're looking for. So I know, like, when I teach the class, and then more importantly, when I go through the training program, I always, instruct people to, when they're interviewing a client right off the bat, you want to find out what do they have in the way of savings, what is their credit score if they know it, what do they have in the way of available line of credit they can use, perhaps to use temporarily for a down payment. And the bottom line is the more information you have, the more you're able to serve them. And quite frankly, that information is going to translate later on into greater success because they are involving lenders and insurance people, all kinds of stuff. Another question that came in from Vassal. Hey, Vassal. Vassal is from Patterson, New Jersey. A two-part question is, what is the minimum someone can put down for a two-family condo, etc.? I assume he means a percentage. That's part one. Part two is, and you actually touched on military, but Vassal is a police officer, and he's asking, do you have a law enforcement, you offer law enforcement special loans? So two-part question, what kind of down payments percentage-wise you normally look for, and any other special groups like nurses, police officers, in addition to the military?
Hi, Gary. I'd like to start with explaining a little bit about our special program that we do have for educators, law enforcement, medical professionals, active and military veterans, emergency medical service, federal, state, and municipal employees, firemen, and police officers. It's called our special Mortgage for Champions, no bank fees, no bank fees lending program. So basically, we thank these individuals for their dedication and their service in the industry, and we will waive the bank fees for these loans. That will include no application fee, no processing fee, no underwriting fee, and no commitment fee for these individuals.
Wow.
To add also, Gary, and that's, I think that was a fantastic question you asked. The challenge with real estate is really, classifying that asset class. So for condominiums, especially, I think that's what he mentioned it was a two-family, correct, Gary?
Yes, that was the example. Yep.
Okay, so that's really going to depend on what the use is. I mean, if it's purely investment, we view that that falls within our standard 1 through 4 family investment, and it really depends on what type of term he's looking for. If he's looking for something short term where he's looking to fix and flip, then more than likely we'll fall between an 80 to 90% loan to value. If he's looking for something that's a little longer term, where we can get him what we call bank quality, then we'll probably fall somewhere between 25 to 30% in terms of our down payment, and so that results in a 75% loan to value, give or take, between 70 to 75%. So if it's a residential property, and it kind of sounds like a two-family condominium, I don't know if it's someone that's going to own or occupy that, but if they're going to own or occupy that, then we can purchase something with as little as 5% within that type of, that property type. If we're going to do commercial, and they're looking to fix and flip or rehab it, or they're looking to just maybe purchase it and hold it and rent it out, then we'll likely fall between 80 to 90% in terms of your loan to value. So, Faisal, I hope I was able to answer your question.
Yeah, that's actually really good, by the way. As a matter of fact, Rocco says that's good stuff. So Rocco is a pretty active agent over in Brooklyn, and doing quite a nice job. And Roger's asking, and I know why Roger's asking this because I remember a conversation with him when we first met. Does that apply to medical field too, i.e., physicians? When you were talking about the special programs, that is.
Yes, yes, it does. It could be a doctor, a nurse, EMS worker, anyone that's in those fields, and basically any civil servant as well as federal, state, local employee. We will waive the bank fees for those individuals.
And you know, just to add to Elizabeth, you know, Roger, in essence, it's really our way of saying thank you to the heroes of our community. I mean, the program is called Mortgages for Champions, and that's really the way we view it. I mean, individuals within those occupations, we view them as the champions of our communities, and it's really just our way to say thank you. I mean, nothing more. Thank you for doing what you do. Thank you for allowing us to service you, and it's our way to give to them.
Awesome. We'll have a follow-up question or two, and then I think you actually kind of answered it. This is from Elizabeth Anderson. Hey, Elizabeth. And she's asking, if we wanted to take advantage of the Champion program for our own homes we live in, question mark. I guess that she's asking, can we do that? And right now she's saying, I am in the process of refinancing through my credit union for the home I live in with the rate of 2.6 APR. So I guess the question is, can you use the Champion program for their own home use? And I think you kind of mentioned that. We were talking about the duplex, owner occupied, which is living one right out the other, versus renting both sides out, which is of course not owner occupied, and that case. So I'll go ahead if you could elaborate on. Oh, she says she's a state employee. Elizabeth is.
Yes, Gary. We can definitely use this for a purchase as well as for a refinance of their own personal home. That can definitely be used for that situation.
Okay, good. Hey, I've got a couple questions too, if you don't mind. I mean, I don't know about you guys, but man, the wheels are spinning inside of my head pretty fast here. So we talked about the ability, the opportunity to purchase or refinance single-family homes that you live in. Also, rentals in the case of a duplex. Technically, if you live in one side and rent out the other, you fall into the category where you can do owner-occupant financing. And I've just wrote down storage, retail, office, and flipping. Can we talk about flipping just for a little bit? Because I know we got some people on who work with flippers, and some of these folks actually flip themselves. Can you give us a scenario on a flipper and what's possible for funding? Maybe a couple of scenarios, because sometimes they'll finance it all the way through. Sometimes they'll purchase it outright and then finance the remodeling. Sometimes they'll purchase it for cash, remodel with cash, and then refinance because they're going to hold it. So I know that's a loaded question, but I think that would help a lot of folks right here right now, because flipping still is a very popular subject these days,
No, and I agree, Gary, and I think that's a fantastic question. I mean, ideally, flipping is really a very, very hot market at this time. I mean, the challenge for us all, because I am a real estate investor myself, is obviously get into the property first. But again, it's a great business to be in now. Some of the programs we offer, again, I think it's really going to come down to what your time frame is. I mean, if ultimately, if your exit strategy is to, purchase, acquire, and you want to flip within 12 months, typically most hard money programs are 12-month terms. We do have some terms where we can go up to either 18 months to 24 months, a little further out. But generally speaking, most hard money terms are 12 months. They're really created to allow you to acquire the property, to attain the funds you need to renovate, and to obviously exit so that you can move on to the next transaction. Generally speaking, most of my programs do not have prepayment penalties. Some do, and if they do, they may require 1 or 2 months of interest-only payments. So generally speaking, with hard money or bridge loans, your payment is going to be an interest-only payment. Interest rates will range from between 7 to 13% generally, and a lot of it will depend on your experience. A lot of it will depend on your loan-to-value, and some will depend on the property type. But I mean, ideally, we do have programs that will allow you to purchase, to renovate, and to exit. Now, if you're looking for something a little longer term, where you may want to purchase renovate and you may want to hold, you may want to rent it out. We do have some bridge loans where we can actually go up to maybe a 3-year term or a 5-year term. So again, the first question that I would ask is, what are your plans? What's your exit strategy? So if you tell me that you're a true flipper, you're looking to purchase, maybe put as little possible in the property and get it back on the market, then a typical hard money term really will work for you. And my job is to get you the best interest rate pricing, lowest points, and lowest fees. So Gary, I hope I was able to answer that question for you.
Yeah, that was good. I'm just thrilled. I mean, I know when I first met Elizabeth, you know, I'd been teaching for a couple of years, and of course, when the economy turned back in late 2007, 2008, 9, 10, I mean, there just was not as much flexibility and opportunity when it came to borrowing money. It was just really things tightened up. Not just tightening in the sense of, it was harder to get money, but the number of programs available were reduced dramatically. And so when I saw Elizabeth, like, wow, this is like it was, many years ago, and it makes it so much easier for your investors to grow. So I'm just thrilled that this stuff is available. And I know it's not like, hey, it's not like Christmas and you just make a wish and the money comes out of a stocking. I mean, your clients have to be qualified. Nobody's giving away money for free. You've got to demonstrate a solid track record and credentials. And although, having said that, I know that there's programs out there that are very, very lenient. But in any case, we do have some follow-up questions. So Rocco's asking, if they do, what are their rates and terms? Who's in first position? And I think he's referring to the example you gave, and I know the answer is a lot of it depends, but rates and terms. So in the case of the flip, what would be and I hate to pin you on much. And by the way, make sure you tell people, hey, as of today, this is what it would look like, but it could be completely different tomorrow. So maybe a range of rates. But that probably would be better to answer that. And then the next one is actually similar question. What are the rates for hard money loans? So everybody's interested in rates right now. Yeah.
Well, Gary and Rocco, again, great question. So generally speaking, for hard money loans, your rate range will fall between 8% and, again, 13%. I have actually seen some loans that were a little closer to 14%. You have to keep in mind, we generally do not have a minimum credit score, but, we will want to see a credit score of at least 620, between 620 to 650. Obviously, credit scores directly correlate with risk and interest rates. So if your credit score is in the low sixes, then we may feel comfortable lending on the property, but we may also, extend at a slightly higher interest rate. So that higher range really will depend on the credit score. If the credit score is in the low sixes, then you may actually fall between 12 and 14%. But if the credit score is strong and the investor or the borrower has some experience, then we'll likely be somewhere in the nines. I want to say maybe between 9% and 9.9%. Typical term, again, is 12 months. Again, we feel comfortable with that term. That type of term will give you the opportunity to acquire the property, renovate the property, and also, be able to exit and put the property back on the market. Gary, you made some good comments previously, and I just wanted to say, the prevalence now of commercial finance, really, the driving factor now is that there are a lot of properties on the market, and we're seeing a lot of individuals that are acquiring the experience. Now, previously with commercial finance, the idea was we were looking for either anchored or non-anchored real estate that, was driven by a lot of foot traffic, and we were looking for long-term leases. And I think that perception is kind of changing slowly but surely. As you look at the way technology is changing the way people shop, people no longer view your anchored stores such as your Walmarts, your Kmarts, your Best Buys as something that's bankable, because now most people are turning to the internet to shop. So I think for commercial real estate lenders, we also are changing our perspective now. We realize that the technological climate is changing. Our investors are changing, especially with millennials now entering the marketplace. And I think, a lot of commercial real estate investors have capital that they're just sitting on, and we want to figure out productive, safe ways to invest this capital and to continue to build communities.
Awesome. Well, I'll tell you what, I'm just, again, I'm so excited because I know for me personally, when I first got started investing in a big way, this is, you know, back in the 80s, when in the late 90s, when I realized, you know, this is how I'm going to get out of the corporate 9 to 5 gig and get out of the rat race. Prime interest rates, in other words, your first term, your first loan, first position was at 9%. We thought that was good because in the early 80s it was, you know, 18, 19%. So 9% to me, I do that all day long. I mean, the fact that we can get 2.5% loans now to 4.5% commercial is just unbelievable. But hey, in any case, a couple of other questions. This is Fassel is asking, okay, for owner occupant, as far as first time home buyers, since I know a lot of police officers who do not have a lot of money to put down, but they want to get into real estate, any way to help first time home buyers with closing costs? Maybe they get rolled.
Well,
maybe they get rolled into the loan term, for example.
okay, so Gary and Vassal, to answer that question, as long as the borrower is buying it and closing it in their own name, then that would definitely be something that we would take care of. We can do that with as little as 3.5% down, and we have an FHA loan program for them that will help them acquire the house with very little funds. They can also do a seller concession if they don't have money for closing costs, and with FHA, they can go as high as a 6% seller concession. And believe it or not, they can even borrow the funds for the down payment. So this will help an individual get into this house with very little money.
Yeah. Hey, by the way, speaking of FHA loans, I generally don't I haven't done an FHA loan in probably 20 years. But a lot of new investors like them because it allows them to get into a property with little money down, and they get a 30-year term, which means that their payment is lower, et cetera, et cetera. But there's been a lot of confusion in people because they hear, well, you can only have 4 properties, and then they won't lend you any money anymore. Another person will say, well, they'll let you have 10 properties. Can you elaborate a little bit about that, about some of the governmental restrictions and banking restrictions on how many FHA loans you can have, and also, you know, what happens when you don't live in the property when it comes to FHA loans, if you don't mind.
So no problem, guys. So generally speaking, with an FHA loan, you're allowed to have 1 FHA loan at a time, unless there's a circumstance that, you know, forces you, such as if you're married and you happen to divorce and you have a property that's in your name and your ex-spouse's name, you're able to purchase a property as long as you're able to produce a divorce decree or divorce stipulation showing that the other party is going to maintain payment and is fully responsible for the property. Then you are allowed to acquire another FHA loan, even though you have 1 loan on your credit. Another reason that would precipitate you having 2 FHA loans, let's just say you're working for a company in New Jersey and you relocate to another company in New York. As long as there's a minimum of 60-mile difference between the properties, then we also are allowed to finance another FHA loan. I mean, FHA loans are great products for first-time home buyers. I think Elizabeth mentioned a lot of key points: the low down payment. We have a little more flexibility on the debt-to-income ratio. We can go a little higher, and the interest rates tend to be a little more aggressive. So, I mean, again, FHA loans are really, really good, and they work well. Now, in terms of multiple properties, Gary, I know you mentioned, so with FHA loans, you're only allowed to have 1. With most conventional loans, in terms of Fannie and Freddie, they will allow you to have 5 finance properties, but we also have some investors that allow us to work with individuals that have up to 10 finance properties. So that's just some food for thought for anyone out there who has an investor that has 6 properties and they want to stay within that residential realm and they don't want to close in an entity name. I just wanted to, you know, put some additional information out there.
Okay, appreciate that. And let's see, Lauren's asking, what about 203K loans? I don't know if they're still back in style or not, but yeah, go ahead. I'm sorry. Yeah.
Well, you know what? 203K loans are a very, very good option for residential property. So what happens? 203K loans are administered by the Department of HUD. They're FHA loans. They allow you to acquire a property, and you can finance the renovations into the loan. Now, this applies for 1 through 4 family property, so it's a great tool. Loans that are under $35,000 fall into our limited program, and loans that are not loans, but renovation amounts that are under $35,000 fall under our limited program, and renovation amounts over $35,000 fall into our full 203K program. Again, the rates are very, very aggressive. You can actually acquire a property with as little as 3.5% down. You can finance the cost of the renovation into the loan, which is amortized over 30 years, and it becomes pennies on the dollar. So again, it's a really, really cool tool.
Awesome. Okay. Okay, here's a question from Rocco. Rocco says, I have a client who purchased a 2-family home using the FHA program. However, they want to refinance their loan. Can they do that to reduce their monthly obligation? So I'm sure they probably could, but I guess you have to look at the difference in the current rate versus the whatever rate that's out there right now. But I think the answer is yes. If you want to elaborate, that would be great. He has a client who has a 2-family using FHA, and he wants to refinance.
Yes,
Can they do that?
Yes, of course. Well, of course, we'd have to see what the loan to value is, like you said, and see what the scenario is, and see if the rate that they have now, if it will benefit them to actually get the new rate. But as long as there is a cost benefit to it, of course, we would definitely love to help you with that opportunity. We can refinance it. We probably want to refinance it out of an FHA. That way, they would no longer have the PMI. So that would be the best way to do it. But we have several options that we can explore. We would have to, again, see the scenario. But I would be happy to help that person with that if you'd like. As Clay said, we'll give both of our email addresses at the end of this webinar. If you guys have any individual questions or any scenarios you'd like to send by our way, you can just email us individually, and we'll get the information out to you or give you a call to discuss it further.
Sure. And Rocco's following up too. Oh, I'm sorry. Go ahead.
I'm sorry. No, I just wanted to add too. One of the things that is a really, really good tool in this environment. I mean, listen, the Federal Reserve has already made a commitment to increase rates. We don't know whether that's going to take place in December or at the meeting in 2017. But I mean, generally speaking, traders are already building in this price increase into the 10-year, so the 10-year note. So with that said and done, this is a great opportunity for anyone that owns a residential or a commercial property for that matter. If you have equity in your home, this is a great time to entertain possibly cashing out if you have the need for it. Because with a home equity loan, I mean, they're great for the short term, but they're interest only for the first 10 years, and they become fully amortizing for the remaining years. And in this environment where interest rates are going to increase, they're going to increase with the prime rate also. So if you have the ability to cash out, let's say for educational purposes or to do some renovations on your home, it's a great time to do it and lock in a 30-year fix before the rates begin to fluctuate. So I just wanted to add that also.
Okay. Yeah, I appreciate that. And Rocco's just following up, and I think we kind of got the answer. Will the interest rate vary, and would it be able to remove the PITI? And I think well, PITI, Rocco, stands for Principal, Interest, Taxes, Insurance. I think what you might be referring to maybe is the mortgage insurance. And I think isn't there a threshold of 20%, Corey and Elizabeth?
Yes, it would need to do another appraisal on the house and see if there is 20% equity in there, and as long as there is, then we can definitely remove the PMI.
Okay. Okay. Yeah, and he's asking, he said no, he owns it under less than 10 years. So I think, Rocco, you need to have a conversation with Elizabeth or Corey about your client and maybe make an introduction, because there may be an opportunity there for your client. Okay, let's see. Faisal was asking, just curious, how many loans can an individual person put in their personal name? Is there a way to put a loan in an LLC? And I think we kind of answered that. You definitely can get loans in an LLC, Faisal. And I'd recommend to all investors very soon, if you decide you want to keep investing, you should be using LLCs. In fact, if you could, Corey, Elizabeth, do you want to elaborate on that? In other words, having properties in an LLC versus in your own personal name?
Okay, so great question, Faisal. So generally speaking, again, remember, if it's a residential purchase and transaction in nature, you will have to close in the name of a natural person, okay? So that's the only way that we're able to close on a residential transaction. Now, typically, residential transactions are property types that are between 1 to 4 units and that will be owner-occupied. If you know that you're looking to acquire a property, whether it's a fix and flip, whether it's a purchase in whole and you're going to rent it out, but you know that you know it's for business purposes, as Gary mentioned, I always recommend closing an entity name. The LLC is the easiest to actually create, but you may have a need to create a general partnership or a limited liability or a limited partnership depending on how many principals or guarantors there are involved. Now, the benefit of closing in an LLC or corporation is obviously it shields you from the liability. So if it's an investment property in nature and you have other investments or other asset classes, your wealth is spread out, then you definitely want to protect that interest. And by closing in the name of an LLC, it will isolate that property so that if anyone started any litigation as a result of that property, it will be limited to that particular, the assets under that LLC, which obviously is very wise if you have asset classes that are spread out.
Yeah, I appreciate that. And another thing too, Faisal, is Corey mentioned earlier, see, when it comes to lending, there's a person behind it all who's actually funding it, who's actually providing the actual funds for the loan, and we call them investors too. And what Corey mentioned earlier, some of those guys, they're okay with you having 4 properties, some are okay with you having 10 properties. Some there's no limits. It's just they're looking at you, your character, and they're looking at your experience investing. Now there is one restriction that I think applies no matter where the funding comes from, and I could be wrong, but I used to run up against what's called the loans to one ratio. So I'd be working with a bank, and I'd have so much outstanding, like $1 million, $2 million. They'd say, no, you've reached our loans to one ratio. We can't lend you anymore until you either sell some properties, pay some off, or what have you. But when it comes to private funding, do you still have to adhere to that loans to one ratio I think that comes from a government regulation, if I'm not mistaken?
Well, Gary, it's a great question. So on the commercial side, I mean, one of the things that we do want to inquire, if we're working with an investor that has multiple properties under ownership, we will want or we'll look at their global cash flow. We want to get an idea of where their capital is coming in from. We want to get an idea of how many properties are owned, and we will take that in consideration. If we have someone that has multiple properties and their loan to values are high, and they're looking to acquire another property, well, the first thing we're going to do, we're going to look at the property's ability, obviously, to service itself. We want to see whether it can service its debt. We want to know what the spread is between, or just how high our debt service coverage ratio is to see how much capital will be left over. But we will utilize that in our decision. So if we see somebody that's spread very thin, they have a lot of real estate with high loan to values, it may be possible that we may have to walk away from that scenario, Gary. So I think it really depends. We will look at each scenario individually. And obviously cash reserves and other reserves will play a part in the decision also. Okay,
cool. Well, I tell you what, we're kind of getting, I mean, we can keep going all night long. This is such an awesome subject, but real quick, I wrote down storage, retail, and office. We don't have to talk about each one in detail, but I know a lot of these folks are going to have clients from time to time who want to buy a storage facility or refinance or a retail space like a strip mall or a small office complex. What's your appetite? What do you see as the appetite right now for your investors who are funding these things for those 3 types of properties? I don't know if you had any active or current examples, for example, you can speak of, because that's probably going to pop up from time to time,
No, and you're right. And you know what? It's fairly strong, Gary. I mean, again, we're going to look at each property individually. We want to know whether it'll be owner-occupied. If it's owner-occupied, we want to look at the borrowers. So recently I have a gentleman, he owns and operates an auto body and tow shop. That's been his primary business for 30 years. He's looking to acquire an auto body shop in Jamaica, Queens. So he's going to relocate his current business where he's leasing, and he's going to owner-occupy the current auto body shop that he's looking to acquire. Very, very strong appetite for that. Only concern we had, we wanted to ensure that there were no environmental issues. So obviously we're looking to, I'm still waiting on the environmental report to come back, the phase 1 report to come back. But again, strong appetite that, all the bodies fall within our industrial property type. I'm also working with another gentleman who's purchasing a strip mall. It has 8 retail stores, very, very strong appetite for that. Each individual store has a long-term lease, and the leases are strong. It's a strong rental area in that, strong rental market in that particular area. So for those types of properties, we're very interested. We have a very strong appetite, especially if we have someone. I mean, we like owner-occupied properties, especially if you manage your business over time. We are going to look at 3 years of corporate tax returns. We just want to get an idea of the gross income. We just want to see, not so much we're going to use it to qualify, but we want to look at the strength of the business. And we also will welcome individuals who are looking for pure investment, meaning you're not going to owner-occupy. So again, Gary, we definitely are interested in those property types, but we will look at each one on a case-by-case basis.
Awesome. Okay, well, I appreciate that. Hey, I tell you what, I know we're moving along here as far as the clock goes. Let me just check. I think we got another question here. Let's see. This is Vassal. Is your underwriting in-house, or are your pre-approval equal to commitment letter? Okay, is your underwriting done in-house, and is your pre-approval equivalent to, I think I knew the answer to that last part, but if you could go ahead and elaborate on that, then I'll have you guys, if you could, provide your contact information and maybe a final words of wisdom, because you've clearly got an engaged group of people here, and I think you made a lot of friends tonight. So,
again, we're very, we appreciate the opportunity to speak to the attendees today, and we just wanted to say thank you. Vassal, that's a great question also. So, you have to keep in mind, for residential lending, we're mortgage bankers. So we process our loans, we underwrite our loans, we fund our loans, we do everything internally. On the commercial side, in the commercial lending division, we serve as mortgage brokers. So we have investors, and what we'll do is for each and every scenario, we'll go through the scenario and we'll select the best investor for that particular client. So generally speaking, what we'll do is I'll complete the pre-approval for your client, I'll assess the property's ability to service its debt, I'll review all of the pertinent information, and at that point, we'll look to acquire what we call either a letter of intent or a term sheet, which will indicate our investor's desire to finance that particular property and what the terms are. So it's a little different between residential and commercial, but I think that's an excellent question. And what we'll do is, once myself and Elizabeth, we're going to provide an email addresses. We will welcome any additional questions. We'd be happy to assist you guys with any scenarios at any point in time.
Okay. Well, what kind of words, if you could, if you had, let's say you're in a room of 5,000 people, you have 5,000 questions. You can't, obviously we could be here for a week, but is there something you can think of, words of wisdom based on your years of experience working with investors, that you can share with these guys? Because most of these folks are agents. Some of them are investors, but for the most part, everybody here is going to have their license. But what can you share with them, just a word of advice, words of wisdom, if you don't mind, being a little, put on your preacher's hat for a second. And if you don't mind, share it with these folks, because a lot of them are really looking for help and guidance, and folks like you. And I do too. I mean, stuff changes, and you guys help me stay on top of the game,
Well, you know what, Gary, I 200% agree. And one of the things that I wanted to emphasize, and I mentioned this earlier, so outside of my position as a sales manager or residential home funding, me and my wife, we're also property investors. So I'm just like everyone that's on, that's attending today. I mean, we're all pursuing the American dream. And what I try to say is, well, what is the definition of the American dream? I mean, to me, it's not to go to secondary school, graduate college, come out and get a job. I think ideally, if you really want to utilize or be a part of the American dream here, I think it's allowing, whether it's through real estate ownership or any other type of investment, you want to have residual income. You want to have income, and I know, Gary, you touch on this in your workshops. You want to be able to have income that's actually growing and maturing while you are using your resources to do other things. And I think real estate is an excellent vehicle to do that. Myself and Elizabeth, we take pride in not just being your loan officers, but we want to be friends. We want to be your financial consultants. We want to make sure that this is something that you and your family are doing, and it's the right investment, okay? Because if it's not the right investment, we don't feel we did our job in the best way. Elizabeth, would you like to add anything?
I absolutely agree with him. We will take each scenario on a case-by-case basis, and we will give them more than one option when available, and we'll walk them through it step by step, and we'll give them the features and the benefits. We'll give them the good and the bad. We'll tell them the pluses and the minuses of each one. Of course, it'll be up to them for them to make up their own mind with which they're going to go with. But we're not just here to just give them one way of doing it, especially if they're confused or they're looking for guidance. We will walk them through it every step of the way. And we're there to go on the journey with them. So we're here for them, and we'll make sure we see it till it closes. What's nice about being a bank and a broker is that we do have different avenues that we can shop these loans. And so if one way doesn't work out, we can always go back to the drawing board and kind of speak to another investor and see if there's another way if they're not happy with what we're presenting to them.
Yeah, and also too, you can, please correct me if I'm not being accurate here. Are you able to serve people, like if somebody called you from Utah, even though you are not physically in Utah, do you have the ability to help that person too through referral, or even through the fact that you're a mortgage broker and a mortgage banker, which is critical, by the way. Mortgage bankers, I mean, I always try to go with the mortgage bankers myself personally, as I knew they could either do it in-house or they could refer it out because they're also a broker. But because we have people literally, I mean, I can tell you right now, they're on from California and Florida, North Carolina. I mean, I'm seeing people from all over right now, Georgia. But how do you, like, when those folks were to call you tomorrow, do you have an outlet for them also, for the folks across the country?
Okay, well, that's a good question as well. So residential home funding, if we're going to do it on the residential side, we're licensed in many states. I myself am licensed in New York, New Jersey, and Connecticut. However, I do have other colleagues here that hold other licenses in Pennsylvania, in Florida, in Georgia, North Carolina, South Carolina. So if they do come in with a question and they do have a residential deal that we're going to have to close and fund residentially, then I will actually bring in one of my other colleagues who has the license and work alongside with them to make sure we get that closed. However, if it is a commercial deal, we are licensed in every state. So if they're going to be buying it and closing it in an LLC, we can do every state. That's not a problem. Again, I think Corey's putting up our email addresses and our phone numbers right now. And if any of you would like to reach out to us and email us with your particular scenarios, questions, clients, we can actually answer those questions. And we'll just take them on a case-by-case basis and handle them that way.
Sure. Well, by the way, thank you for sharing your words of wisdom at the end or two. I know for me personally, when I was actively, aggressively growing my real estate portfolio, it just seemed like I had better success when I worked with people who were actively involved in the same business, and even in your case, Corey, even investing yourself. I mean, that meant everything. It's like you understood, you had this underlying current of understanding that people pick up on. So I think that's a valuable asset, the fact that you're walking the talk and you're one of us, we're one of you, and that kind of thing. So I appreciate you guys sharing. I can see you got a computer screen up now that has no lender closing call. So this is for the Champion program. It's got your contact information. So go ahead and recite it. Go ahead and call it out verbally, phone number 2 and email, and then also I'll make sure it goes in the email out that Beverly sends out, and I'll make sure Beverly gets you all the registrants too for the webinar tonight too.
Oh, that would be great. Thank you. Yes, this one happens to be my email address on here, Elizabeth Fragale, which is Fragale, Fragale @rhfunding.com. My phone number, the best way to reach me is my cell phone. I can be reached at 914-494-1405. This particular office, we're out of White Plains, New York, but we do have other locations throughout the Eastern Coast. And Corey this is Corey's information here. This is a little bit about RHS Capital Commercial. And here's Corey's information. Corey?
So, again, guys, you can reach me on my cell, and that's always the best number to reach me, even if I'm in the office, and that number is 347-451-9818. Again, that number is 347-451-9818. You can also reach me via email. My email address is canglin@rhfunding.com. And I'll repeat it one more time, and it's also on the screen for your convenience. It's canglin@rhfunding.com.
Excellent. Hey, by the way, Faisal is asking, Elizabeth, can you say it again? I think you're Eve Fergali at rhfunding.com.
Yes.
Sorry. Okay.
Yes.
Yeah.
FRAGALE at rhfunding.com. We'll get that back on the screen. Here you go.
Okay. Excellent. Well, I tell you what, I got a feeling you're going to be getting some calls from, let's see, Roger, Faisal, Rocco. You definitely should be getting on the phone tomorrow. Actually, Rocco may call you tonight. So,
Okay.
just kidding. But we have some real go-getters. All these guys are absolutely go-getters. He's saying I may laugh out loud, but it's such fun to work with folks like that, because I think I've got, high octane fuel running through my veins. I just don't ever seem to stop, and I love working with people like that. But in any case, hey guys, I just want to thank you from the bottom of my heart. This was really awesome for you to share your own. I know this is your own personal time. You've got, families and children and spouses and parents and things like that. But for you to share your valuable time and resources with these folks is invaluable, and I know they appreciate it. I'm getting a lot of great call. Thank you. I think one comment was excellent. I mean, this is has been really fun. So thank you from the bottom of my heart, and for everybody that's on here. And
Sorry, thank you for thinking of us. Thank you.
yeah, you're welcome. We'll have you on next month. Matter of fact, hey guys, you want to have these folks on next month, because maybe by then you'll have more. Now that they've heard you and seen you online, now they can come to the table with examples, and we can bring real live examples up to go through. For example, could be very instructional for a lot of people. Everybody's saying thanks again for the information. Let's see, Herminia Florimon from Eastchester. Hi, Herminia. Oh, hey there. We were swapping emails earlier. So, in any case, I'm going to let you guys know. I know it's getting late. I appreciate it. I will get this recorded and uploaded, and we'll get you, Corey and Elizabeth, copied on the send out, and I'll have Beverly send you the registrant list. And we'll look forward to seeing you guys next month online. We'll figure out a date and a time, and also I'll be there again the week, 2 weeks after Thanksgiving, and I might actually be teaching at White Plains. So I'll keep, matter of fact, put a bug in the ear of the team leader for me, because I need to call them. And I know Michael at the Bronx office asked me if I was going to teach up there, Scarsdale and White Plains, and I've had the opportunity. So if I can do that and help you guys out again, I'd be glad to do it.
Okay, perfect.
So.
Well, thank you again, Gary, everyone, for allowing us to tell our story, and we wish everyone a wonderful evening.
Awesome. You're very, very welcome. Thank you, too. And everybody online, have a wonderful week, a great weekend coming up, and God bless you all, and we will see you all next week. Okay, take care, everybody.
Have a great weekend.
Good night, everyone.
Good night.
Bye-bye.
Bye-bye.